Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on VVOS. We think the industry is very stable and what could possibly go wrong after 1000% gain.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey guys, how's everybody doing today? What's up, Johnny?
Yeah, going good. Very excited. First live stream.
We are finally live. It's been a long time here, but ready to get started. Vivos was a really good buy at the top, definitely.
Oh yeah, that was talk about volatile.
Whoever's purchasing around $40 is a really, really smart choice. Good job, guys. It's a way to really, really nail the market, nail the timing.
Yeah.
And I think it's back down 60% now.
Yeah.
You know, the interesting thing though is too, there was insider buying 2 days before that popped. So you actually, there was a little bit of a warning that they were going to put out the news about the trial passing. Not that I invest in biotech really, but there was at least a little warning.
Yeah.
So if you played it, great. Nice job on you.
Well done, well done. I did not participate in that one.
No, I missed it too. Damn it. Next time we'll get it.
We always have next time, right?
Right. All right, so let's pull up the old dashboard here. So what is it, December 2nd right now? Just coming off a hot week. Inflation data was down, so you can see that kind of all over the place stuff was up. A lot of green this last week actually. Just looking at everything here. Looks like a lot of the risk category was pretty high. You see that? Hang on a sec. That's just.
I saw. Sorry.
It's just updating as I scroll down there.
Yeah.
And I guess I'm pulling up 600 value. Don't need that. But all right, you know, banking, REITs, everything that was like low, you know, transports are up a little bit, home builders. I feel like all this stuff is stuff that just kind of pulled back as the market started to go down a little bit, and then it's all coming just kind of back a little bit. You agree?
Yeah.
Oh, I don't leave that up there. That's fine.
I think we have some issues, Dane. I am not on the camera.
course, there's gonna be some technical issues here the first day. There we go. All right, sorry guys, it's gonna be a little bit just testing. One thing RK had the huge advantage of is there's just him. Having two people streaming at the same time is a kind of a pain in the ass. But whatever.
It's been a real pain.
Yeah, so the problem is anytime I'm clicking around here, I'll get used to it. But either way, so there's going to be just some blips here and there, but I'm not really worried about it. I mean, any of these names, are you in any of these things? Like, I was in Rig, but I got into Rig when it was like I don't know, it was like $1 or something like that. It was so cheap at the time. And I know it was leveraged, but oh my god, the story was just such a turnaround, and with offshore drilling just being like so just undervalued. It was a pretty easy choice, I thought.
I remember you talked about them, and I've followed them as well, but I never got an entry there. But you did pretty well there, so that was good to see.
Yeah, I think that was one of my first 3-baggers I had gotten. But all right, we can hop over to the dailies. Like I said, I mean, everything was hot. It was a big week, so I think there was like 200 stocks that came up over 10%. At least this is going into the weekend, so this is everything off of a Friday, essentially, guys. And I had just went through before the stream and just kind of picked out some tickers that interested me. I didn't see too much on the weekly movers or whatnot. New Egg, they had a nice pop. Did you see what the news was there, Johnny, yet for that?
No, but I saw. I actually saw on. I don't remember the website, but there's a website that tracks like social sentiment, and they have been on the Reddit page quite a few times now.
Gotcha. I saw there was a share buyback that they did, $10 million worth. So I mean, if they did that right before this pop, if it was like around $1, I mean that's 10 million. Or what is it, 1 million shares or 10 million shares? No, if it's $1 and it's 10 million, yeah, it's 10 million shares. What was their share count? Is it high? Now 10 million shares is kind of a throw in the bucket, but still, it shows management's doing the right thing, I would say. I mean, obviously, the stock market reacted well to the news, right?
Yeah.
All right, so we can go to fundamentals. We can get started here, guys. When we go through the stream, we will go through the dashboard, but when stuff's moving, a lot of times I'm going to refer more to the dashboard, probably when I'm looking at a company and I'm trying to find something in the charts that interest me. But other than that, I don't necessarily think I'm going to be going through it all that often. Probably maybe once a week we'll kind of actually go through and just check the charts just to see kind of what's moving, and other than that, it really just kind of more grounds you. If you haven't looked in a while, once you've looked a few times, I feel like it becomes a little bit more unnecessary. How much do you look through yours, Johnny, a lot?
Yeah, I actually do. But I also, when you were speaking just now, I remember that I think we didn't mention that we also have a sheet with the weekly movers, right?
Yeah, no, I have weekly too. If I didn't mention that, that's one thing about this scrolling here is the movers or my quick links here get off the screen. Yeah. But I have weekly in here. And looking through these, a lot of these are just so small. Even though they're big moves. If you have a $1 million market cap and you went to $2 million, like I'm not looking at that. That's a little too risky even for me. But in the 85 or 90 range, like some of these guys, I mean, this is a biotech, so I'm probably not looking at that too often. But I mean, some of these might be interesting. So when you guys look at this too, if you see my date column here, this one here, anytime you see a date in there, that means it is something I've looked at in the past, because I always mark that when I put it over into the database. I mean, some of these I might have looked at real quick and either just checked the news or looked at a chart or something like that, and it just didn't interest me enough. So I might have looked at some of these other ones too, but once they go over into my database here, I always put it into this column, and then this gets pulled in all over my spreadsheets to just remind me of what date I pulled it up. But we can start going through Kirkland's. pulled up Kirkland's just because how much? What was it up by? I think did it have insider buying? No, it didn't. It must have just been up a little bit. Kirkland's is one of those struggling retailers. You guys can see it here. I think I'll just kind of go through a quick, how I would scan through something like this, Johnny, so then that way people can kind of get an idea of how I'm looking at things and learn how my mind works. And after doing this for a while, so like I said, no insider buying, guys. Somewhat low market cap. I mean, 40 million's getting down there. And EV's at 233, so that automatically lets you know that there's a decent amount of debt on board. And if you look right down here at book and tangible book, you can see these are negative. So that means that there's quite a bit of leverage with a company like this. Margins are down. If you go back to 2017 or so, I mean, you can see that this is a business who's been struggling now for quite a few years. Revenues are down. None of these are good signs. This is all negative, but it means that these are the kind of ones you got to pick through and see what else is going on there. No dividend, cash flows are negative, and they're negative over a long period of time. The only one I got here is the cash flow from operations was positive on a 7-year average, but it's getting down there. It's starting to drop, so all this isn't good. None of it's good. No, they don't really get involved in acquisitions or anything like that. So we can assume most of these are just based on the actual company. The only thing that wouldn't show up down there is like mergers and whatnot. Now, you guys will see too, because of my leverage calculator, it still gives it, we say share count could be expanded about 10 times to try and de-lever this. So the next big question here, we got to go over to the debt. Now they got 210 in debt. They barely keep cash on hand, so they don't have a lot of extra cash on hand. It says 40 million in short term is due. So when I see that amount's due, and I'm trying to determine if a company like this could have the turnaround, first thing I'm going to do is go right to the SEC here, and we'll go to like a recent 10Q. This is a pretty quick way of doing it. We can go right to the balance sheet here. And we can see what's going on here. No preferred, which is always good to see. And then do they separate into long-term and short-term? They don't, do they? Because the other thing too with the retailer, guys, is you got to make sure it's not all operating leases, because if it's all operating lease liabilities, because this is only current. Where's long-term? They like how do you write a 10K like this or a 10Q like this and not have it? But senior credit facility, so you can look here, and a revolving credit of 90 million. So it's a revolving credit. So I don't know if you guys have questions on the way like debt works and stuff like that, we can get into that. Once the stream gets going, and if people are interested and you have questions, please just add it into the chat. One of us will keep checking the chat to make sure that we're answering you guys as we're going through here. Companies in compliance with the covenants. There's a 2023 credit agreement. 62 million in outstanding borrowings, no letters of credit outstanding, with approximately 27 million left. So we got to figure out when that's due. Because this is March 28th. Extended its maturity date is to March 28th. So the good thing is the rest of it's not due until 2028. But still, it's confusing why it's not all listed there. So if this is operating lease liabilities, okay, so it's all just operating lease. So the short term is operating lease liabilities. So it's not debt per se, like as in they owe someone something. So this revolving line of credit here, this is more the concern of debt, and these operating leases themselves. Yeah, the reason why RK in the original videos, because I don't know if you always explain this to people, that you don't necessarily consider that as debt, because if you were going to go bankrupt, like those liabilities would disappear because you would sell off those assets. Like you don't pay lease, or you would get rid of the leases. It's like saying I rent a house and then I don't want to keep renting. Well, you don't have to pay the future rent necessarily, not at least in a liquidation for like a company per se. So back to the fundamentals. So it's not necessarily like that this is going to kill it, but they always have to have enough cash to pay that. And then what you want to do is you want to check. So they're dropping share count, but not by a ton. So there must be some kind of small buybacks here. And then the other thing too is debt though keeps climbing. Well, actually it was 285 in 2019. So they're trying to pay it down. But the big issue here too is if they don't have anything coming in from cash flow from operations, then cash flow from operations is the money that the company is actually building up. So if you don't have anything coming in there, you have to either issue shares or take on more debt. And going into this environment where the interest rates are a lot higher, these companies can really get squeezed. So the other thing then you want to check when you go back to the other side is what is our margins here? How much room do we have to play with? And if we're getting down to 2%, now we're at minus 2%. Honestly, I would say, Johnny, that this entire bounce on this is basically just from the fact that the markets have recovered from the bottoms a little bit as the Federal Reserve starts to say that, they're not going to probably rate hike, unless inflation really starts to pick back up or something like that. So this is definitely cigar butt right here. This is the point where, you'll definitely pull up a chart. What do you say?
I have a couple of questions on the fundamentals, because also so you guys know, as Dana is speaking, and I'm going through it on my sheet. So if you hear some clicking or something in the background, I'm also pulling up the same stuff. So we look at the same things, and I've also gone through some articles already and checked. I saw there was from one a bit older, from Courage and Conviction in this ticker.
Is this under Seeking?
On Seeking Alpha, yeah.
Yeah, I mean, don't get me wrong, guys. I mean, this obviously hit a bottom. The market was saying around this dollar mark is they're not expecting bankruptcy right away. So, with that being my understanding, that's just what the fundamentals were able to tell me. Once I get to that point, and that's my conclusion, just based on my quick look at the fundamentals, now you have to dive into news. You got to look at what other people are talking about. That doesn't mean I understand anything else really about the business, and the most important thing is understanding how the business is actually ran. So once you get through that step of just kind of seeing what the fundamental picture is currently, okay, well, what can we do now going forward? What can the company do? Is there anything changing? Is this something that could be turned around before it goes bankrupt? That's where all of a sudden all your questions start to head. So where, like Johnny's saying, where he's starting to look into the articles, that's the next big step.
Yeah. And I have some questions on the fundamentals, because I saw the retained earnings is like just more and more in the negatives. What do you think about that in this company?
Yeah, same thing. So the problem is retained earnings, which on my end, guys right here, I just compare it to assets, which you can see keeps dropping. So returning earnings are what's left over after everything's been paid, including dividends to shareholders, which they're not paying. But you can see as this number starts to drop more and more, the equity itself starts to become less and less valuable. A lot of people, especially Wall Street, always seems to just look at earnings per share. That seems to be their metric of choice. But remember, if you're not looking at cash flow and you're just looking at earnings, if I took on $10 billion of debt, I could put $10 billion of earnings, which is obviously, if I'm putting that into capital expenditure and I'm expecting some kind of return over time, that makes sense to maybe to value that a little bit more than what it's showing just currently. But that's also a lot of ifs. And, when you take on that level of debt, it starts to put a lot of pressure on the equity, because if a company's to go bankrupt and you just took on a bunch of debt, the debt's senior or has seniority to the equity. So it just you would lose everything essentially. So when you're doing this kind of investing and you're looking at these sort of companies, it's super important to really know where the equity stands. And is there any chance you get your money back? This is the whole margin of safety argument is that's kind of the minimum that you're looking for, is things around that. I would say, what did you said? Courage has a thing on it. Courage and Conviction.
Yeah, but it's from 2022, so it's a bit old. So I didn't read through it, but the thesis there might be dead already.
From 2022. Oh, I see what you're saying here. He's got. What was his final conclusion here? The balance sheet, yeah, working dollars and operating cash flow, and material to pay down its revolver. He's a great merchant, smart. He and his team experienced a major success and made a number of unforced errors. I mean, he priced it at $3 then, but this is the problem: is that the picture just keeps getting worse and worse. And if you do have a legitimate turnaround story, and you can see too, he's listing the short interest here. It's something to consider as something gets heavily shorted.
Question.
What's up?
No, that was my next question. I also saw there's like 11% short interest right now, and I wonder if the spike today maybe affects the short interest. I don't know.
Well, and it could be the shorts here. I mean, as you can see, there's a little bit of a squeeze actually on the chart here, because we got down to, I got down to $1.40, which is actually, if you looked at one of my, I do a quick calculation of my fundamentals. Mine gave it a value of about $1.22. It got down to, I think, $1.40 here. So, and these is a pretty crude valuation metric, but it just gives you a ballpark. All that's really saying to me is, hey, this is going to keep dropping. I mean, he called $3 and it's back up there. So, you know, maybe in a good market where Kirkland's could possibly thrive as a retailer, you know, that price might not be unreasonable. But, you know, a lot's changed. The interest rates keep getting worse. The chance of them, a lot of times when you have a revolver loan like that, the variable interest rates can kind of kill you, because as you take that, you know, the next year, if your interest rates go up, that revolver, every time you're using it, it can be really painful in times of a high rate environment. But to just go back to the thesis here, and then with the short interest, Johnny, at least the way I look at it is, what is the short percentage in comparison to the float? Because as these guys get over aggressive and how often and how much the percent is of who's shorting it, you can kind of get squeezed at the bottom here. And if a company, like similar to how GameStop worked, especially when it's over 100%, I mean, that's insane. But, you know, at 11%, are these guys able to sell out slowly and not, you know, cause the price to squeeze too much? Probably. But, you know, it depends on where these guys shorted too. I mean, if they shorted, you know, let's go back to that chart real quick. You know, if they were shorting around, I don't know, when it got up to $4, if that's where some people started shorting, or if we zoom out more, maybe these guys have held it since it was at $20 some. You know, I mean, these guys are up massively. So when it gets down to this $1.40 mark here, a lot of the shorts might just be covering, because then, you know, but I don't blame them if they basically hold it till death, because this is a tough turnaround story. I mean, I'd have to dig in a lot more story-wise on how they can actually turn around. You know, he's talking about resuming buybacks here and, you know, a better liquidity position. I don't know if it's one of the things that this is all from last year, so these comments are starting to get a little bit old, but But I don't know if it's one of those things they can turn around. That, you know, a lot of times these retailers can start to sell off the stores that don't make as much. A lot of them are transitioning to online. So the next thing that I was going to delve into, if I was going to, which I think this is going to be it for me for Kirkland's. It's just not cheap enough, basically, for my risk level. This would have to get a lot cheaper for me to be interested. But that would be to dive into the actual 10Q and 10K reports and read through, or at least check the transcript and see what management's saying they're doing to correct these issues. And then from there, it's just kind of judging. Do you think management can pull it off? And if you're going to start to get into a company like this, you're going to be following it over time and checking and making sure that management, when they're saying that they're going to increase things at certain amounts, are they really hitting those goals? You know, how are they handling the situation? Because if they're not able to keep up with it, then this one might be toast. This is getting low. Just to pull up my database here. So if we search real quick here. So just because I do a lot of quick abbreviations, just to highlight things. I said poor fundamentals. It's small, which is a risk. Bankruptcy is a risk. Too expensive. They have high debt relative to their assets. But I'm actually going to remove that because like I said, the debt is. I mean, there's the revolver, but it's also a lot of operating leases. So that's a little. What's the word? It's not accurate, essentially. I can't think of what I'm trying to say here. And then I'll put that $1.22 mark in there, and then I would just like a little bit of a discount to that. You know, with me looking for 50% returns, that's kind of an easy way to just give a basic calculation on where I think it should be trending. So I'd say like 80 cents, somewhere around there. 80.
I saw I don't maybe you talked about it, but I think the spike in the prices they reported 2 days ago. So obviously the market liked the Q3 report there. Sorry, Dane, can you go to the be right back screen real quick? Yeah. Okay.
All right, so we'll continue. Sorry about that. All right, so we're back to laughing. Okay, we're on the correct thing here. So that's Kirkland. You said you don't have anything to add to it there?
No, just the report that I saw the spike must come from that.
Either way, so that's Kirkland's. So I mean, that's how kind of we go through a company. At least that's at least how I do. You know, when we have Johnny do his stream, you'll get to see the way he kind of goes through his data and how he comes to his conclusions. You know, some of them it takes about that long to get through. I mean, 5 or 10 minutes, you know, to kind of just get a picture of what's going on. And it's really more to see if I want to delve into anything more with it, or is it kind of pretty quick. I'm going to move on to the next thing here. All right, so next is Genesco. It's footwear, apparel, accessories, operate through 4 segments. Have a few different kind of chains. They're doing e-commerce now. I don't know if have you heard of this company? You ever?
No, but I've seen the ticker before, but I can't remember much about it.
Yeah, I've definitely looked at them before. At one point, I remember thinking that they had gotten pretty cheap. So let me see what the chart looked like. Oh yeah, that was right. somewhere in here they had a huge drop off, and I don't know if it was just an earnings miss, but I remember seeing it get down here, and the problem is I think I saw it. The first time I looked at it was at like 30 something, or it might have been right on this drop here, and I don't remember exactly why I didn't pull the trigger right there, and I think it's because I thought it was going to go a little bit lower, and maybe at the time it just missed where I was about to buy in. Maybe I thought it was worth like, I don't know, 17, 18 bucks, something like that. But then it popped back quick, and I think the next time I saw it was around like $22, and so I had just kind of missed getting in on this real low one. Obviously, still wouldn't have been a bad time to get in. I mean, it's still almost 50% right from there, and you know, I got up to $37 the one day twice. So I mean, you can start to see. Not that I'm too much of an analyst here, but you know, you can start to see some resistance somewhere in this, you know, and then these are the peak line there going across there. So I would say nowadays we're looking somewhere in there. Would you agree?
Yeah, sorry, I'm just pulling it up on my end, but from that chart where you said at the lowest end there, it's a pretty quick bounce back.
Yeah, because that was just oversold. When I looked back, there was no reason it's worth more than that. My calculator here is saying, yeah, it's a little bit leveraged, but it's saying, you know, $29 a share. So when it gets down that low, I mean, that's almost an immediate buy. Yeah. And the thing is, too, if you look at their cash flow from operations, I mean, they've had some really successful years. Then they have one bad year, and now we're probably going to start to stabilize into somewhat more normal values. But this is why, you know, looking at the overall picture of what does a 7-year or a 3-year look like, I mean, you're talking on a 7-year average, their cash flow from operations is $4 a share. That's pretty good. And that's adjusted. That's adjusted down for the leverage, too. So, you know, I'd say that this is a pretty well-run company. Let's take a look at their debt real quick just to see how much we got going on there.
I see the short term is 137 million.
Yeah, 137. So, but once again, retailers too. We got to see what their store footprint is. How much is that? How much of it is the leases? That's one thing, and I know RK commented on this too. Is it's kind of a pain with the share radar data that you can't take the leases out of it, at least for the long term. Short term, obviously they need to be there, but for the long term, you know, is this 672 accurate or not? Sometimes you just double check those things when you check the SEC reports. Another thing too, there was insiders. Let me just peek at what time and how much they bought for. Yeah, I mean, look at this. This guy got $17. Matthew Diamonds, he nailed that. 1785. Is that literally the bottom? I mean, I think this guy nailed the bottom.
And there's others also on 19 and 18.
Yeah, I mean,
in the same period.
So that's why insider buying too. Like I said, this was a missed opportunity for me, definitely, because and I think that's why a lot of times if I see its price moving, I pull it up because I'm always just like, oh, how did you miss that one? But you know, it's in a pretty good position. You know, earnings have been pretty steady. Let's look at the margins here.
So there's a fair amount on the leases, if I saw correctly.
Probably. Another thing too that you can pull up too when you're trying to gauge management is I'll show you the def. Which is just another SEC report that helps to show how involved the actual like board of directors and stuff is. But yeah, I mean, a lot of this is, you know, 400s there. And then they actually do have their long-term debt listed here, so it tells you that it looks like they must be both in the U.S. and the UK is where they get it. But these are just revolver facilities. So basically, a lot of credit revolving is it's not where it's like a term. It doesn't necessarily have a term to it. So you're able to take the money out. Think of it like a credit card. It's really kind of how businesses use a revolver loan. But yeah, so a lot of this is operating leases. So honestly, this might be a little less leverage. So we might be able to drop this down. And now you can see that it's telling me it's worth $33. So the thing is, when I'm trying to get these bigger returns, guys, you're trying to see like what we're swinging for here. It's got to be cheap if you want to have decent returns. These things, but it's good to see companies like this and then to just read the news on it, because you'll see other people get interested. Who was it? Was it Stavos? I think Stavos was in this one. When I start to see some of those guys in the comments and things like that, this is a typical value stock or deep value stock, because that's the same thing we're all kind of looking at. I think some of those guys tend to swing trade a little bit more, but with one like this, I mean, if you got this at $18, somewhere around there, it's definitely worth even swing trading it, because it's not worth that. Not with how they've been performing, but tumbles after lowering annual. So here's a little bit negative news. Slumped 22% on Friday. This is yesterday they put this out? So wow. Oh, so I didn't even notice it. Did you see this? It had a huge drop. How did I miss that?
No, I didn't.
Where's the thing here? Oh, yeah. Okay, so it's just... What, are we on daily? Okay. Oh, so this is daily, guys. So, yeah, look at this. It was up to 37, and then they came out with news that it was going to drop. But this is one thing that I think gives a real advantage as a value investor is, I'm trying to value this based on cash flow and just in terms of leverage. And then you take in a credit risk. You can compare it to other people in the industry, but sometimes that's deceiving, because you see a lot of companies that are in the same industry, and without really knowing those businesses, just because you're in the same industry doesn't mean that one company is easily comparable to another. It's not like everybody in retail is apples to apples comparison. Like it's tough to always do that. You might be able to find 2 or 3 companies that are in the same realm and use those as kind of markers, but when you start to see stuff get up like this, as a value investor, you're already trying to get in somewhere down here. So by this point, you're starting to trunch out of these things. Every time there's one of these big pops like this, as a value investor, this is typically when you're going to start to sell parts of your position. You've already made 50% returns. And if you were confident enough in this and you took a large enough position, you can really start to... expand your profile, and you can watch for the pullbacks. And like I said, once I've looked at this company too, I can start to see, you can start to look at the points of resistance and support technically. And I know a lot of people who are going to be like, you're not a value investor if you're even talking about technical analysis, but I think the charts do help a little bit with that, with just trying to see where sentiment is. And for the people who are investing here at the $37 mark, you can tell those guys are all narrative based. And the problem is that's where you get burned. If you're all narrative and you're buying in here, you think things are going well, and then until you get the next news, which the problem is the next news is this, that their annual profit outlook is declining, and that they don't think they're going to be doing as well. So adjusted diluted earnings per share is $1.50 to $2 compared to the range of $2 to $2.50. So it's a big drop. They're down 1% to 2%. And I will say I'll give management some credit, because I like when management will come out, especially we're coming off Black Friday, and that was probably a period where they expected a certain amount of sales and maybe they didn't quite hit what they wanted. So I give them some credit for coming out here and saying that they're not going to hit those markers right away. You'll see companies like Alto that keep their mouth shut for way too long, and then when something hits, they get smacked, because you gotta be transparent. I think that's really important for management to be transparent. Sorry, Johnny, I feel like I'm rambling, man. If you got something to add, go for it.
No, it's cool. I'm just again with the short interest. I find it a bit strange. It's at 10% there roughly in this company. What do you think about that?
What's the GCO? Yeah, I mean, I don't know who's shorting. This isn't.
No, that was my point. Like in the other company, I can understand if you're short, but in this one, I struggle a little bit to see the clear bear thesis to be short at even at this level.
Yeah,
Because
yeah,
the data is from middle of November, so it was down in the 17 range in May. You know.
yeah. And maybe that's why I think a lot of people who are shorting in this environment is they're shorting because it's retail and they're just expecting
Yeah.
retail to get smacked overall. And I'm not saying they're wrong. Over the next year, as it's so hard to judge macro things, and this is why I think shorting's tough, because when you're shorting, you're especially a cyclical like this, I think you're looking at the macro picture, and I think that's why a lot of people just got burnt. A lot of the people who were pretty bearish going into this last month or two. I'm not saying things don't look grim at times, because you can see how much credit people are taking on. The average consumer is seeming to get squeezed. The housing market's slowing down, because who is buying a housing market in this interest rate environment? So I would imagine that's what these guys are doing. And maybe to their credit, maybe they bought their shorts right here. I don't know. But
Yeah.
when was
this data that I have is from 15th of November.
Yeah, so it's probably from before that, but where's the chart again? I mean, if they shorted in here, or maybe these guys have been holding their shorts since it was at 47. I mean, you know what I mean?
Yeah.
Because 47,
I can understand. I don't disagree with what you said about the macro environment and people's buying power right now, and how that industry can be affected. I can agree with that, but surely there maybe, yeah, I don't see it in this exact company, because they are. If you look at the 2023 numbers compared to last year, it's up a bit, in the cash metrics and all that.
Yeah, and that's why cash is king. Whatever the operations can pull in, that's the most important part. But if it continues on, this is the thing too, because look here at the 3-year chart. So everybody post COVID got the huge bump. The rates were way lower than they should have been for longer than they should have been, and you got a company that got up to $67, and we go back to the fundamentals here in 2021. Well, they actually looked really good then. So my guess is as things started to turn, here they probably got a little overpriced. Don't get me wrong, $15, almost $16 a share in cash flow is insane. So
that was Stabo's comment on one of the articles, that he didn't buy into that upside is limited when it was trading at $70 17 months ago.
To trade at 10 times that is not crazy to me. And this might be a little confusing to some of you guys too, because I do a lot of things based on cash flow per share, and like I said, I adjust it for leverage. So a lot of times the metrics I use aren't going to be common to what most of the industry uses, but I've done this long enough now using these numbers that I kind of know where these things will land. And you can see, like, I can say that I predict it's around $33, and you can see that it's around $33. So a lot of times, there's exceptions. These numbers don't work great when you're looking at like financials, or if you're looking at utilities. A lot of the communication industry is tough because they take on such heavy leverage, but that's just nature of the business. So you have to learn those things about the different industries. But with something like this that's blowing off that much cash, like, yeah, to say that it's underpriced at $70, if I was to do the math for it, that might not be actually that crazy. But then the problem is the very next 12 trailing months going into this year, it's a pretty big stumble, and now there's a little bit of a recovery. But yeah, you can see over time, looking at a 7-year, whether it's for, if you're including capex, which simple free cash flow just takes out the capital expenditures of the business, versus cash flow from operations, which is just how much they generated before that. Still at this, if you did this by 10 times, you could argue it's worth $50. But But that's what I'm saying is when I take into the leverage account, it brings that to a more realistic picture to compare it to stocks across the board, and to assume that if that leverage gets any worse or they start to squeeze their margins, because I mean look at the net margins here. In the good years we're at 4 to 3%. So, and this is for net income, for cash flow. They were doing well here, but you can see the net income, they're struggling to keep up with that. We're talking revenues of almost 3 billion here, and then 2 billion, 1.8 billion, too. So the revenues took a huge hit overall too. So, understanding the business better will help to explain why that decrease occurred. But all those things have to be taken into consideration when you're trying to value something like this. And like I said, I had taken a little bit of the leverage off here because I was using net common. But if I go back to cash flows, it does drop it down to 29. And if you were just to look at metrics without changing anything, which puts the current share count back down, brings it up to 47 million, which, like I said, if you look at a 7-year average unadjusted, it could be worth around $50. So for someone to argue it's not worth that, I'm not saying they're wrong, but that's why it's important to understand, is the company deleveraging right now? Do they have the cash to deleverage? And if not, where is it going in the future? And I think the thing that you try, as you become a value investor more thoroughly, if you can't predict these things well enough, then you have to understand that you have like an upper limit that's your margin of safety. Because once it gets to a certain price, like you're guessing at that point, and you're speculating, and the whole point is to limit that. And like I said, the part of what drew me to RK's whole strategy in the first place was, how are you getting into these things safely where most people wouldn't even touch some of these companies? But you, like I said, it's important. It's important to look at the fundamentals, to understand the business, to understand the a little bit of the macro environment. I don't say I don't pay attention to it, because it does affect things, but it's all those things in tandem that allow you to really understand the full picture and trying to make more sound decisions. And then from there too, like I said, I'm taking pretty conservative in terms of my number of stock picks. So I take relatively heavy positions. So if I'm going to go into something, I need to be very confident that I really understand what's going on, because I'm not trying to take on like 70 positions, because to understand what's going on with 70 positions to the level I just explained with just these last two companies, it's just too much. It's too much to keep up on. I'm going to fall behind on things. News is going to come out. You're going to miss things. And if you do have that strategy, I would argue that you're probably trunching in and out. And, if you lose a quarter or a percent or something like that on some of the positions, it doesn't matter as much. But I can just tell with my style, I'm better off being more tuned into a few companies and really staking my claim and just getting large returns on just a few companies at a time. So Johnny, I don't know, you might be different than how I view that. But I'm happy with having 5 to 10 companies in my portfolio, and that's it. And of those 5 to 10, probably 2 or 3 making up most of my portfolio for this one. Like I said, just as a disclaimer, always, guys, I have multiple portfolios.
Yeah. No, I'm the same. I actually right now I have fewer than that even, and like we have discussed a bit in the previous videos, it's those things changes rapidly. Right now I have things going on that I need to prioritize other accounts and build them up a bit. So my plan is to free more money in like 2024 to buy more stocks again. So I'm right now my portfolio is very small, very focused and concentrated.
Gotcha.
But that may change. And no, I agree with a lot of the points here. I just looked through the press releases in this company, and I just saw now that they have repurchase authorization since June 2026.
Has there? Yeah, they've been buying back. I mean, look. I mean, even if you look here, they've almost halved the share count from 10 years ago. Yeah. So
that's a positive. And I also noticed, like you said, the revenues has gotten a hit, and yes, they have. But since 2012, it's it's somewhat consistent also, like 2.5 billion. And I guess you can argue the company is in a better place now than it was back then. Don't you think you can say something like that?
Yeah, I mean, definitely in terms of share count, but
Yeah.
it's tough. No matter what, as a company continues to expand, to keep the same margins as you get bigger and bigger, you're opening more and more stores. Like you there's only so many places that are like the best places to have a business. And once you start expanding into a little bit lower margin areas, your margins are going to start to come down a little bit. And the real question is you know, is it worth opening in places where you're only going to squeak out a little bit, because then in rough times those might lose money for you, versus, you know, being squeaking or gaining as little bit as you can out of some of the smaller areas. So I would say it's been pretty historically ran well, though. I mean, not only is share count coming down, but overall debt's down too. Back in 2020, they had about $1 billion in debt, and now we're hovering between, you know, 6 and 7, I would say.
Yeah, and you see tangible book has been consistently growing.
Yeah, and I'm a big fan of tangibles versus intangibles. Not to say that, you know, certain companies it's going to be mostly intangibles, which is fine as long as you're confident in those intangibles. You know, whether it's a brand or, you know, my biggest thing is when these guys buy, or, you know, so like smaller companies and whatnot, and they're just trying to diversify through doing that. I know they call it diversification. But when you see that, then they're writing everything down and it's not generating margins, and all they did was increase their assets. Like, you know, focus on your business. Sometimes that's the way to go. Focus on the business.
No, I think at like the insider, I tried to Google him, Matthew Diamond. I like the name, by the way, Diamond.
There you go.
But he nailed it. Like that was close to the 52-week low.
Matthew Diamond Hands.
Yeah. Yeah. He has not sold, so.
And one thing too, you can just go to the beneficial owners here.
Yeah, I was saying, in my data it says they own 6%.
Oh, here it is. Amount of beneficial owners. It does. I don't like how it doesn't say the percentage though. Usually it does it by percent.
Yeah.
They own 795,000 shares altogether, which it's, you know, if there's about, it says 12.5 million here, so it's not quite 10%. It's like, it's 6.2%. Okay, I mean, read.
Yeah.
But I don't know. It's not bad. It's not great. You know,
No, exactly.
I mean, BlackRock owns a ton of it.
But also maybe when they only own 6%, then insider buy can be looked at more positive than if they own a lot. I don't know. What do you think about that?
Yeah, no, I agree. And like I said, you could see when he timed it, it's perfect.
Yeah.
So just to show you real quick too, for my database for this one. So if I'm looking at something like this, let's see here. We'll update here. Last time I looked, it said $36. So yeah, we're hovering around that range. You know, I just said good management, cyclical, insiders, and I had it on deck. On deck for me just means something to keep an eye on. You know, buybacks, delevering. So kind of similar to what we had talked about, Johnny, for right now.
Yeah. Yeah.
And I think the only thing I probably could have added to this last time was it had missed. It had gotten too expensive. But you can see, I said around 18. It's you know, that's a buy value. So it sucks, you know, just missing it right there. But either way, it's definitely an interesting company. And with this minus 16% here from having the lower outlook, this might be one to keep an eye on, because if the narrative changes and they continue to pull off decent cash flow going into the future, this is one that might get back down to that range and maybe around that again. It'll be worth taking another look at to see if we could get interested in a position down there.
For sure.
All right, so next one I had up is, I keep clicking over there. I'm so used to having to update stuff. But let me just scroll over here. Was Cricket? Is this Is this that little machine? You ever seen these things? Like I think my wife has one of these, and you can design all these things with it.
No, not heard about it.
It looks like a little like printer basically, but it's I think this is it. It's like a little printer thing. Yeah, and you can design all these things. Yeah, it's this thing. You ever seen this thing?
Oh, okay.
It's pretty popular. I always wonder. I know. It probably tends to be more women that use this kind of thing, but you could design almost anything. And I know people are, anybody who's artsy and crafty probably enjoys this thing. But I always wonder, once you buy this, do people tend to stick with it? And what's the long term gain from something like this? I think the actual product itself is relatively expensive, and then from that point on, though, is where is the revenues? Is it this a subscription type thing, or is it all just more in the
product?
What do you say?
How does that product work?
So, for instance, if you want to design something, there's all these templates online, or you can design them yourself. And it when you go on the computer, you can pull up like a graph, and then you can design whatever you want on there, and then you can send it to the printer, and the printer will either just print it out with whatever kind of thing you want, or it'll cut it out. It actually has like a little cutter, like you can attach a blade to it, and it cuts it out. It's pretty fancy. It doesn't always work 100%. I think that's one thing they got to keep working on, is making sure they get it working as advertised. But I would say it's a pretty nice product. I could see a lot of interest in this going forward. So with this one, guys, real quick off the rip, it's not that old. We really only have data for the last 3 years. You can see a lot of my data is pretty blank going from before that, so I can't look at that a ton. It's considered safe, so that's good. If we look at the EV, they must have like zero debt. Yeah, so I mean they got plenty of cash. So this is a super safe investment. I mean they're actually working cash net positive, which is that's big. Which, if you don't know what that means, it's basically just saying that if you were to kind of liquidate everything, like the company actually would make money for shareholders. Just scrolling through here. I mean, look at this. Look at this.
I see they have a dividend. Do you get the same?
Yeah, $1.35. Is that accurate?
I have 133, so I guess it's in the ballpark. Yeah.
I was gonna pull up Seeking real quick. I'm gonna close some of these out because I don't know if this affects the stream at all. First thing I see is 10%er sells $7 million worth.
Yeah.
Potential is there, but significant pain ahead. Revenue misses. Does it say anything about their dividend in here? This is interesting here. This is the kind of metrics with a product like this. Total users, it's up 16%. I mean, this is November 7th. Okay, so this is recent. And paid subscribers. So there is a subscription service, because that was my big question. Is how are they generating money after they sell the product? Is there a continuation of that? And up 11%. I don't know. So that doesn't look bad to me.
So I guess the subscription is for templates and.
Oh, I'm sure.
Like that, then.
Yeah, they probably have like more professional type designs on there, as opposed to just the stuff that you can design on your own. Or I think what you can do is you can design stuff and then go on there almost like Etsy and sell your templates. So like you could do it yourself.
Yeah.
Feel free to correct us if anyone's watching this in comments and things like that. Let's see here. Yeah, they sold $7 million worth, but how much? I mean, what do they own? This is Abdil. You ever heard of them? Abdil?
No.
Let me just check Whale Wisdom real quick and just see what Abdel here. So this is the thing. They sold $7 million worth, but they own 117 million. So it's still a massive position. Honestly, they're probably just trimming a little bit because that's a huge position. Did they own more than that? Oh, interesting. Affirm. Form the core toast. Globe and HubSpot. So these guys are similar to these guys are probably value investors.
I saw them on the Open Insider just now. They have bought in many. They have bought up a lot of stocks like day after day, week after week.
Well, they're big. I mean, they gotta slowly buy into things, but
Yeah.
just trying to see. Let me see what this guy says going forward. Revenue's growing impressively at 22% rate. EBITDA's lagged. No one cares about EBITDA. Management has done a fantastic job of monetizing its product offering. They launched a subscription service that has positive uptake, although we are skeptical of its long-term story. Facing numerous material risks, its margin development has been underwhelming. Its free cash flow generation is volatile, and its growth rate in the medium term is uncertain. Yeah. I see what he's saying here. Business model is quite compelling, underpinned by a fantastic range of products. It built its own little ecosystem. They think it will get long-term. Highly discretionary set of products. We see pain ahead. This will only worsen the uncertainty associated with the company, making it incredibly difficult to assess the normalized long-term trajectory of the company. And yeah, so that's what I was kind of talking about, guys. So the other thing too is when you go back to this. Now, you can look at these numbers and here it's saying it on my value calculator, it calculated $4.28. But the problem is this is only on 3 years of data. So, just this dividend alone, if that dividend alone holds up at $1.35, if you were going to hold this for 2 years, you can basically say, okay, right now I value it at $4.28, but I can basically add almost $3 because just in dividends alone, I'd get paid out that much. So that would put you up to the current price.
Vein, I saw the press release they have a press release about the dividend, and it seems like it's where did I put it? A special cash dividend.
Okay, so it's a one-time off?
Yeah, I think it is.
Gotcha. So, like I said, when I look at this, it's an interesting company. It's a good company for sure. But I would need a few more years to get confident in where this is going to land. And if you're more of like a growth type investor, this is probably more your specialty, where you're going to see something like this with only a few years of data and be able to better predict on where you think it'll be in a few years. Where value investors tend to wait for that information to come out, and then we kind of wait more for a moment where that price kind of gets, for whatever reason, lower than it should be. Whether including the growth prospects or not, it gets down. And I know when I'm talking value, I think I don't know. I've read so much on value investing, and I don't understand why everyone always just looks at earnings, or they base it off some like these like PE ratios that are just insane to me. Like what is a PE ratio? Like they talk about PE ratios like growing and shrinking, but that has so many other variables like that. It kind of takes away, it sounds to me almost like technical analysis in ways, because you're saying it's worth this much in this PE environment, but the environment changes and you can't predict that. So why even look at it based on that metrics? To me, it just doesn't make sense. Yeah, I'd much rather predict off cash flow and comparing cash flow to what does the cash flow turn into in terms of earnings, and then paying attention to the margins and seeing how that business is changing over time, and is that going to be a good thing or a bad thing? And when things get tight, how do they take on leverage? What do they do? Do they hurt shareholders? Do they take on debt? Do they find the debt at a reasonable amount? Like I said, these guys have a lot of cash on hand, and they're not burning cash. They are. I mean, if you look at here, they're slowly burning through their cash, but they haven't had to really take on any debt or anything, and they are generating cash flow now. this is really the year that you start to see cash flow from operations come in. I would imagine this is probably from the subscription service. What do you think?
Yeah, I don't know this company so well, but I assume it must be. Yeah.
Yeah. Well, so I'm trying to think. The first time I heard of this thing had to have been either right around COVID or before COVID. Like I said, my wife has one. I know some people I work with at work have them. I think my sister-in-law has one too. So it's a pretty relative well-known product. For me to even have heard of it, like this isn't my thing. This isn't like my kind of hobby. But to have heard of it is good for me, at least in terms of sentiment. But the other thing too is for all of a sudden to see this explosion in cash flow. I wonder if that's all due to subscriptions. Where was that Seeking Alpha article? I want to see. Did this guy comment at all about that? People are using EBITDA. I don't necessarily think EBITDA is a great way to value companies, but to each their own. I guess if you're looking more at just growth and you're trying to predict the business, maybe EBITDA is a okay thing to use. But its subscription revenue and machine revenue streams both remain positive, up 13% and 5%. So little bits from the machine sales, and a lot of it's more from the subscription revenue. So I think going forward, the most important things that I would probably try and look at with this company is how do these increase over time? Do they start to really crunch? Because the subscription service, when it first takes off, maybe it's super impressive at first because you get a bunch of people interested and you kind of get that first wave of all the people who are going to do it. But in a year from now, is everybody who's done the subscription, number one, are they staying with it? And number two, is there continuing to be new people interested in the subscription?
Yeah, I would have to dig into to look into that platform, and like you said, if they also have a way for selling your own templates there, so people can make money there, I can see that that can be attractive for some people to create a community and a platform where the users also can make money. Yeah, and then I guess they take a percentage of everything going on. But I think this comes down to how you believe in this platform then.
Yeah, I would agree. And the one thing that worries me too is, and I know this probably depends on the person, because I know certain people are like super crafty and they use this stuff. But most of the people that I feel like that have gotten this product, they get it either for like a single purpose, like for instance, like say someone has a wedding coming up and someone's trying to make a bunch of designs for their wedding, and they use it a ton during that one period, but then this thing tends to get stored on the shelf afterwards because it's not like everybody has time to sit there and do this all the time. Now, I don't know, maybe there's maybe there's interest in more of like a retired population or just people who, like, when I get home and I have spare time, I like to do crafts. So maybe there's enough people in that section or realm that will continue to use the service like that. But I do think from most of the people that I've seen who have gotten this, it tends to be a quicker use product, and then it tends to sit on the shelf a lot. Yeah. So
no, I agree. I was thinking the same, and I don't know what's going on with me today, but I keep talking about the short interest. I don't usually care too much about it, but I saw it was 17% in this one.
You're looking for squeezes. You're looking for the squeeze, man.
Yeah. No, like the short interest doesn't. It's just something to look at. I don't build a thesis on it, but I thought it was interesting to see, especially when the market cap is pretty high already.
Yeah, you're right. It's actually, it is higher than you would think. Yeah. And I would actually...
I can see there's some potential here for downside,
Yeah, I would think, well, just like I'm talking, I think there's a bearish case where things look good right now. And I think the company's doing everything they can. I wouldn't fault management for anything that they're necessarily doing right now. I think there's not much they can do to control how much people are using the product. You know what I mean? Like, now at this point, it's just what is the level of interest for the product. And to argue that will decline over time, I don't think that's necessarily a bad argument.
No, I agree.
I would have a hard time investing.
They would probably have to, I don't know, like competitors here, but they would they probably have to advertise a lot, and that costs a lot of money.
Yeah, I'm trying to think if I've seen commercials or anything for them. I know it's probably a little different for you guys in Europe.
Yeah.
And TV in America has changed drastically in the past. I'd
But
say like
maybe more through Instagram and TikTok.
yeah, no,
Influence.
definitely. I mean, social media for sure. I'm sure they advertise on there too. Um, I'm sure a lot of it's word of mouth, you know, like or like someone sees something, they're like, oh, that's really cool, and they're like, oh yeah, I made this with my cricket, and then blah blah blah. What's a cricket? And the word spreads. You know what I mean?
Yeah.
But what was the insider buy here? Did I pull this up? Jason. So
It's a new purchase from him.
new purchase, brand new purchase. He's the director.
I could not find anywhere that he's just been appointed, so that's a bit weird, isn't it?
Yeah, wow. And look at this, man. This LLC, they are long this product because man, they've been buying since the 20s. You see that?
They have a couple of sales on top, but it's nothing too big compared to what they have bought.
Yeah, but that kind of worries me too, though. Could you imagine being a 10% owner like this, and then as it gets down to these numbers, you start to think we should get out of this?
Yeah, I didn't look at it as a good sign, but
Well, yeah, obviously.
I don't know them, so they might have very good reasons for selling though.
No, it's true. You should never really go off selling. Selling doesn't. There's a lot of reasons you just sell something. It could be just portfolio management. All right. You got anything you think you want to add to this one?
No, I think we have gone through it. I think personally, I know we have a bit different styles in terms of adding them to, like you take notes on everything. I would not add this to my tracker. I think personally, I would move on.
Yeah, I mean, so for me, you know, I'll put the dividend in there. Just I know it's a one-time off thing. They had low debt. So what these quick abbreviations, guys, are just saying. And these, like I said, it's just shortcuts for my comments, so it doesn't take so long to write comments. You know, over here is where I can put one cash dividend. And the reason I'm putting that, though, is just to warn myself that this dividend that I'm putting here, that's what the D stands for. And if you guys are in any question, they're all over here. So I'll scroll down real slow one time here just so you guys can kind of see them all real quick. Just so in case you have a question at some point, you can refer to that. You know, it's too young, so it's tough to value when they're too young. I said it's too expensive at the moment. Now that's too expensive for me. I'm not looking at the growth. I'm not trying to predict what it's going to do in the future necessarily. It's to watch it and to see what happens. And really, what I put here, this NM needs more. It has low debt, has the dividend. I would say I think as a company, it's not bad. So my confidence on where this stands right now is about a 3, and this is a 1 to 6. 1 being I think it's going to go bankrupt, and 6 being like buy as much as you can at this very moment. So that's a rare. I don't think you will find a 6. I don't think if I've ever put 6. I've had a 5, or maybe 2 times I've had a 5. And the problem with the 4s and the 5s usually is I'm very confident in the business and everything like that, but it's too expensive. So. Yeah. I like everything about it, but it doesn't have the margin of safety I need. So even 4s and 5s, even though it's like a confident in how I'm valuing and understanding the business and the narrative, it's still just not cheap enough for me to take a position. But those would be the ones that I would put on deck, similar to what Johnny, I think, is saying, right?
Yeah.
Yeah, like check on that, because if that does drop for some reason, figure out if something changed with the business, and if not, it might be something where I'm actually going to start to consider taking a position in the building, or in the business, not the building. I'm gonna go set up in their buildings. So 428 is my value. So I'll use that as my value for it. I don't really care. We'll say 6, just because that throws a little bit of a dividend, and we'll see what they can do with that. And then we'll just say $4. Which would give me the 50% return that I typically would look for in something like this. And like I said, that's how quick I do my valuation. Does that mean anything? Not really, but it means around $4. I might start to look at this one again. You know what I mean? That's really why I
Yeah.
put that number in there for anybody who's kind of wondering more about that.
I agree a lot with what you said about the limited amount of data we have in these companies since it's so new. And also, if you pull out the chart when you mentioned 4 now, that would be an all-time low. So it's very hard to find like a concrete entry point on when you don't have so much history to go off.
Right, and that's why I said the $4 would be interesting, because that would seem like almost too cheap for me. You know what I mean? Like, it's not that I think it's worth $4 at any mean. It's more just like around that. Like something's either changed with the business. Like, let's say the whole subscription thing started to fail, or they're just not selling machines anymore. Whatever that might be. Or some terrible lawsuit. I don't know what could possibly happen, but one of those type of things. So that's why it would catch me, and that's one thing. Like I said, you can look on the charts. You can after you've done that little bit of analysis, now the chart starts to mean a little bit more to me. And this whole bounce around that you see here, it's a pretty young company, so you're going to see that. You're going to see where the market itself is trying to figure out where the value of this actually lands. And as we start to get further along in the company, is it going to continue to grow, or are we going to start to more become like a what did Lynch call it, a stalwart, where it just kind of hovers at the same level for a while, and the company just kind of starts to become uninteresting, which can also lead to underpriced. But either way,
I think if this reaches like it takes off the bottoms and it goes towards 4, it's you need to sit down and do another look at it and check everything that we have just talked about again, because with that short interest, and if it takes out the lows, who knows where it's going to end. So then you need to really follow the story and see, maybe that font sells out even more, so you need to update everything we have talked about then, I think.
So it's not on deck yet, but with that buy value in place, if it was to get cheaper again, maybe I'll take another peek at it sometime. But all right, next up I got MATV Holdings. It's a specialty materials company. Offer a range of critical components, engineered solutions to solve customers' complex challenges. Hold on, So advanced technical materials, fiber-based solutions that filter, purify air, liquids, support adhesives, protective applications, advances healing and wellness. What the hell does that mean? Solve some of the material. Maybe they're just saying because they're filtering things, so it's healthier for use. Sustainable packaging, communications, home and office, consumer goods, other applications. Portfolio technologies combines polymers, fibers, and resins to optimize the performance of customers' products across various stages of the value chain. Okay, so it sounds like they provide a bunch of different materials that different companies use in their supply chain, and it either helps make the product better in some way using polymers, fibers, and resins, or purifies things. So there's a few different things going on here. Holding companies obviously can be a huge mix of things, because a lot of them tend to hold a couple of pretty distinct businesses. So we'll have to kind of delve more into that. Sometimes these ones are a little harder to value, I find, just because you have to understand all the different parts moving here. And while one might be really good, the others could be dragging it down, and then they're trying to decide, what's management doing with all that? Are things looking better or looking worse as they continue to take things on? You'll see here, when you look at one of these companies, their acquisitions, you'll see minus 240, minus 280, minus 292, minus 160, minus 600, minus 400. So these guys are buying up different things, trying to grow the company through other companies. And then the other thing too here is you'll see revenues tend to climb a lot with these companies, but the really important thing to pay attention to is margins, because as they tend to buy these things, are these good buys or not? And if they're not good buys, which now we're down to -4 for net income, which is earnings, it starts to let me know that maybe they're not always purchasing the best of companies. And you're looking at share count is almost doubled now. and we got a pretty high EV here. So it looks like to buy all these companies, they've taken on a substantial amount of debt, and they don't have a lot of cash on hand. So when I start to see these kind of declines here, and don't get me wrong, they do have cash flow, so it's not like it's not going to work in the future. But as of now, these guys have leveraged a lot, and we got to make sure that they can pull this off. I also see this, which I don't know if that's preferred, but this whole line here, this non-common equity, is just a warning to me that they might have preferred shares, which just adds even more to the leverage account and pretty much takes away the chance of probably a dividend getting paid. So we'll bounce back here. Because of the leverage on this, it's going to drag my valuation down. Not saying $13 is probably like too high of a value, but without knowing more going forward here and all these numbers getting worse, I'm going to need a pretty substantial discount here. You agree with what I'm looking at, Johnny? I don't know if you pulled this one up.
Yeah, I'm spending some time to pull it up here too, and I see they have a long story of paying the dividend, and also of course they have a lot of acquisitions.
Yeah,
they had a big one in 21, and I don't see that revenue is up by then. But what do you think in terms of the assets and all that?
And just real quickly, John, I was just checking because I was talking about preferred there. It doesn't look like it's preferred. It probably that non-common equity is like warrants or some kind of stock benefit to the managers. So they do not have preferred. So that's why they are paying the dividend out. But now it's trying to figure out how much cash do they have on hand, because the problem is when you pay out that dividend, if you keep leveraging to pay that dividend, once that dividend ends, you're going to lose all those dividend investors, which can really plummet a stock price. And companies love to hand out dividends sometimes, but it's not always the best way to do it. I mean, look at the share count. We're getting diluted as we are handed money back, you know?
Yeah. And the margins has taken a big hit lately. We are looking at 3-year averages, of course, but also in the single years, it seems, well, the cash metrics is a bit off.
Yeah, but I mean, no matter what, you can just see over time the cash margins are shrinking quite a bit here.
Yeah.
So that's, you know, something to pay attention to, definitely. And like I said, so that gives you a real basic idea of where we're at fundamentally. You're going to see that the actual tangible book value for a company like this tends to either be negative or pretty low, and that's just because they're buying all these other companies and they have to write off a lot of it, because it's pretty rare you're going to be able to buy a company without taking on a substantial amount of goodwill, because people don't sell you companies for fair prices often. You usually have to pay up a little bit to take the company over. So honestly, a lot of times I jump right to seeking alpha for something like this. I want someone who's already looked at this and has a quick understanding of those different businesses, because if I'm going to dive into it myself, like if this was super cheap and it was interesting, I might go right to the 10K instead and try and learn the businesses myself. But since this is already probably not right in my wheelhouse, I'm gonna just check someone else's just to see kind of what they're thinking about it. And then from there, if what they say makes me more interested, then I'll do my own further review of things.
I was going to say, though, because it was up 17% yesterday, and I didn't find any news.
Well, like I said, I think that's really just because of the fact that the interest rates, as they start to hold or not jump, the companies that are super risky, like this one, like I would consider this a relatively risky investment. Not like it's going to go bankrupt like tomorrow. I do have to look at the debt to really figure out when that debt's all due, but I imagine it's probably further out. These things are gonna sell. They're gonna be more volatile. So when the market tends to have green days or really red days, this thing can be up 17% and then back down. You know what I mean?
Yeah.
And I imagine, because they're talking about, purifying and these polymers and fibers, that those might all be separate businesses. So See, this guy doesn't even mention anything about any of this.
No.
I might have to go to the actual 10Q here just to get a little bit of understanding, just because that didn't help me at all. That's it. Sometimes these guys write these articles, and I just feel like it doesn't really add anything to me trying to understand what's going on here.
They don't give you so much sometimes, those articles, but that's why I know RK talked about it. We mentioned it. It's important to find people that you think that you see do a very good job here, and start to follow them.
Yeah, and sometimes too, the other best thing you can do here is just go right to the business and go to the investor relations, because they'll have their presentations and everything, and from here you can get a little bit better idea of what they're saying in terms of what they think's going on. Oh, it's just a PDF. Sorry, I don't want to bore people too much with going through some of the stuff, but
sorry, in the news section there, it says they have sold some assets yesterday.
Okay, so maybe they're trying to. Maybe after they bought some businesses, I feel like sometimes you see this too. They buy all these different kind of businesses or different parts that they can absorb into their bigger business plan. Like it might just be one overall business, and they keep buying all these other things so they can start all these different products at the same time in one place. And maybe certain ones aren't as profitable as they were hoping for. So smartly, they're starting to sell off those assets. Especially as we get to a more riskier rate environment.
I think this news. Do you find it?
What's it under? Seeking?
No, it's on the website.
Oh, on their website?
Yeah.
I'm sure I can.
Because it looks like a good news.
This is presentations. I need just.
If you go on top, you see the news in the black menu.
Oh, yes, now I do. I'm just blind. Completion of sales of engineering paper business. Yeah, it was talking about that actually in the. So.
They talk about the depth and how it can unlock their strategy moving forward.
Okay, yeah, and this is why I said you really got to look into these, because there's a lot of moving parts in some of these, and the interesting thing sometimes with holding companies is a lot of people don't start to delve this far into it. They'll quickly look at like a PE ratio and they'll be like, nope, not a value stock, and it's just I think that's just lazy, to be honest.
Yeah.
600 million, which equates to approximately 35. So, reduction of more than 600 million, which is approximately 35% of their outstanding debt at the end of the third quarter, which will be early December 2023. What is the chart doing on this? You said this was up?
It's up 17 as of yesterday.
So that actually might be on that news.
Yeah. That's what I was saying.
Yeah,
I think because I didn't find anything else. They had a report in the beginning of November, so it wasn't that.
What I'm saying, Johnny, is you're smarter than I am.
No.
Yeah. So this one's a little more interesting. Because that's the other thing too. So just to give you an idea, guys. Just to, let's say we deleverage a little bit, that bumps it up to 10. If we take off the consideration of leverage in its entirety, just give it a second. This will calculate at the actual share count. If this didn't have any debt, it would be worth $13. Look at that. So like I said, I find that I do find the way this gets calculated relatively accurate.
We have other examples in the past that it has been right.
Yeah, it's been working okay, and like I said, it doesn't always work for all kinds of companies. Certain ones, like I said, it won't work because of the way it's structured. Insurance and some of the other ones where you have to really understand the underlying, like what they're underwriting and that kind of thing. But But yeah, I mean, look at we're talking 17, and if we got this down to 11, and assets stay there, I mean that's a big difference. Oh, that's what I wanted to check too. So if we go to the SEC report here, and this is a 10Q from 11/9. So most of this, there's some operating leases, most of it's long-term debt. So I just wanted to look at the debt quickly. So there's 2 term loans. There's senior due in 26. Other parts of it were paid a little bit this year. So that must be, there's another term loan there. Do they list it? Okay, I love when companies do this, the repayment schedule here. This is the greatest thing ever. So you can see, the next time that they're really going to have to focus on that is in 26 is where they really start to have to. And in 27, that's $1 billion right there. That they probably have to either take on more revolvers and or restructure that to be due at a later time. But that's something I definitely want to include when I add this to my database here. Oh, it's actually in my database already. Okay, so I have looked at this in the past. MATV.
But also the language in that news about the asset sales is, I must say, I like it. And it seems like they are slowly trying to switch over to what they call advanced technical material segment. Because they say 80% of the revenue will in 2024 will be in that segment, where we are strong position in large, growing, profitable markets.
Yeah.
And they are focusing on reducing the debt. So it seems like just from that the management is at least trying, which is good. And they also proved it by selling that.
Yeah, I mean, you're going to see me as I'm adding notes here. I'm adding that it's good management, that they're reducing debt, they're delevering. I'm going to definitely recalculate my... I'm trying to think what kind of value I want to put in here, just due to the fact that that debt will get reduced. It's not quite down to this level, but I think I'll put around the $10 mark. I think that's fair for now, and we'll have to see where it goes from there. But and honestly, this $7, I'm actually kind of happy with keeping that wherever that was before, in terms of me getting a nice low entry point. But this is definitely one to follow. You agree?
Yeah, I agree, and I think maybe that if you look at the market cap, it's big, but it's not huge. So
I think 7, like in this realm, this is a lot of times I find like that's a really solid company, because the one thing you'll notice too is the bigger investors a lot of times shy away from these. But if this, let's say this doubled and it got to 1.44 bill, then you're going to start to see some of the bigger guys be able to come and maybe get interested in a company like this, Yeah.
So it's a bit weird, because if you look at the open insider day, historically there's heaps of insider buys, but lately it's nothing.
Yeah,
so that's something to pay attention to.
I definitely want to just point out again, just remember, they did dilute shares here, so it's not like a clean story here. This would be definitely a turnaround story. So I'm actually going to throw that in there too, that this is. I think what I'm just going to put is that it needs more. I think they're trying to do the right thing. I think there's actually a decent narrative starting to evolve here, but I don't think I'm 100% confident with anything just yet. This is one to definitely keep an eye on, though.
Yeah, I agree.
And I won't do it on here, as I don't want to bore people, but I'm definitely going to go through and maybe read one of the 10 Qs or really go through that PDF here, just to get a better idea of what else is going on here under the hood. It's not that long, so I think that's a good thing to get.
By looking at the looking at the open insiders also, when I said it was historically a lot of buys, it is, but it's at substantially higher level than what it is today. And what I like to see then is that they have been buying, they've been averaging down basically, but then now it seems to have slowed down a bit with the buys.
Yeah,
I don't know how to interpret that.
Yeah, who knows? You know, the interesting thing here is on 915. You know, he bought a small amount. Like, if there was a large purchase by these guys in this, I mean, Jeffrey bought. This is last year, so this is a year ago. If there was a bigger buy right around the time of selling that the paper section or whatever it was off, it would mean more to me materially.
Yeah.
But I don't know. At this point, the insider is less interesting to me just yet.
Yeah.
But for instance, if there was like a massive insider buy somewhere around this point,
it's interesting.
Yeah, it would become very interesting, because that means they're predicting that sale of assets. And you got to remember, as that debt comes down, not only does the overall debt come down, but the amount of interest they have to pay on that debt comes down. So it starts to generate a little bit more cash flow. There's still cash flow as well as free cash flow positive, and actually have their net cash flow increased as well. So it'll be interesting after the whole transaction goes through and they put out their next quarterly report to see how that affected the business. That'll definitely be something to check out, is when the next 10Q comes out. And to be honest,
if you see on the earnings per share, historically it's well driven.
Yeah. I think the big story here though is this decline. You know.
Yeah. The late one.
And on a leveraged basis, you know, it's slowly getting negative. Now, like I said, they're deleveraging. So that's like I said, you have to adjust all these numbers in your head, because you can't just go on what the spreadsheet's telling me, because this is a picture in the current now, but things are changing. So you have to just kind of take that into consideration, and maybe look back at some of these better years. You know, if we get that leverage down, if we look at the debt. Let's say in 2020, when the debt, well, that was only there. Maybe 2021 is a little bit better of a, 2021, things were still looking pretty solid. You know? So sometimes, just taking this section out here where things have gotten rough, if we consider getting their leverage back down there, and if we can get these margins back up into this range, not negative. I think that'll be important
to see you talked about the jump in the share count, but if you look at the historical data they are very consistent on 31 million shares, and then all of a sudden it goes up a lot. So
yeah, I would imagine the real reason they bumped that share count isn't necessarily because of like poor fundamentals. It's trying to pay for this. I mean, this is $1 billion,
Yeah.
So they when they're buying these companies, I mean that's a lot, and that's the other thing too, is I got to figure out what those purchases were and are those panning out, because if you look at the EBITDA here. Let's just go with EBITDA. Not even actual earnings. That sums to 1.4 billion there, and that's almost the last 10 years. So they spent that in 2 years. All of the earnings on acquisitions, which I know it's a holding company, but it better be worth it.
It's still a lot if you look at the other ones.
Right, but that's what I'm saying. It better be worth it.
Yeah.
So. And now they're talking about selling 600. So I got to figure out what those purchases were, what they're selling in comparison, and did that really is management really doing a good job here, or are they covering up a mistake they made? I don't know. I'm not saying one way or the other.
Do you think maybe there has been a change in management?
There could be
last year. Yeah.
Like I said, that's all delving into the news and figuring out what's going on here.
Yeah.
And I don't think that'll be in here. That would probably be Seeking Alpha that will have something related to any kind of thing, so changes in CEOs or anything like that.
Yeah.
All right.
Oh. I can see just quickly reading through the news the press release on their sites from 2022. It seems to there has been some changes in the company in the last year, so
Yeah.
that's something would have to look more into.
Yeah, and honestly, I'm sure some of these articles are actually pretty interesting. So I'll probably read through some of these just to get a better idea of what's going on.
Yeah.
Because especially with this increase, that, like you said, I'm not 100%. At first, when I looked at it, I thought it was just because of the yesterday being a green day, but now I'm starting to think maybe there's a lot more to that story actually. So
yeah,
low short
interest.
interest.
This is definitely one to keep an eye on, I think, and but it will have to go a bit more cheap for me.
Yeah, definitely for me. I mean, this is nowhere nearby, but it's we'll see how things change as time goes on here. All right. As much as I'd love to keep going, man, I think I got to call this one quits for today.
Yeah, that's fine.
And then
I think we went through 4 tickers, and I think at least a couple of them hopefully can be interesting for anyone who watches this to keep an eye on them. And in the next stream, if you have any questions, we will love to answer.
Yeah, and I might I might go maybe through my screening process, because my goal is, if I'm going to pull a ticker into my fundamental spreadsheet, that it's already a company that's worth kind of looking into. I find it's pretty rare that I'll pull something up and it's just immediately not interesting, because it's just a waste of time. You guys can see that when we are finding things that are interesting, it does take time. You're looking through, you're kind of methodically trying to figure out what's going on here. And some of these have a lot of information, some of them don't have very much, so you're kind of going with that. But when I'm on my dash and I'm scrolling through here and I'm trying to pick something that interests me, why did I select Kirkland's? What off all this in here made it interesting to me? Because the problem is I could select some of these that don't have any tangible book, no cash flow, and it's a massive company. For some reason, it's got $1 billion in revenues, but it's worth $10 billion. Right there is a big red flag. And maybe it's growing. I don't know. But my point being is that's not something I'm going to pull into the fundamental spreadsheet, because almost immediately I'm gonna realize that it's either too expensive or there's not enough narrative. I also started putting the year incorporated over here sometimes, because Movella, I pulled that up, and it's brand new. It's got a year of data. So maybe last time I pulled it up just because it's probably this giant decrease, and we're seeing these massive numbers here, this 14 and tangible books low, and it's telling me now the sales aren't all that impressive, but something to pull up. But it's a small company too, so I might have missed some things here, but those are ones that I probably aren't going to pull up in the future, because it's just I'm not going to find anything there that's really worth picking apart. And like I said, the whole goal of all these spreadsheets, and I think what me and Johnny were what attracted to us this style of investing, is there's a lot of small companies out there that isn't well researched, and you need to be able to kind of concisely go through a lot of data in a very short amount of time. And these spreadsheets allow you to kind of bounce around real quick to be able to understand what's going on and try and make as an informed of a decision as you can before you take on an investment. Sorry, it's a long rambling way of saying I'm not trying to waste time anymore.
Yeah. No, but it's interesting. It's an important part of what we do, the screening process and what you look for. And sometimes I also pull in companies that doesn't look so attractive even in the screening process, but I just do it because maybe I have some more time than normal.
Right.
Maybe I want to sit a bit longer and do the research, but in general, you are trying to be as effective as you can, you know. So then the sheets does a good job by selecting out and filtering out um, yeah, pulling in the right companies for our style.
Yeah, and yeah, I agree. And sometimes, you know, I'll see something pop like 100. Like I think when I pulled up Newegg, it wasn't necessarily that it interested me quite based on fundamentals and whatnot, but just seeing that pop and just trying to figure out what's the story there. That sometimes becomes important because I mean, Newegg's up 86% in 1 week. Why is that? Is there something going on there? Because number one, the fundamentals are from the most recent filing, so all the information is always retrospective. So we're trying to use retrospective data to establish some kind of basic value of these things, but then from there it's all knowing what's going on with the business, what's changing, what, you know. So sometimes I might just see something popped and then I'm checking the news and trying to look at it more that way and see if there's a narrative change or is there a new CEO or is there, you know, whatever reason, why is it causing something like that to jump that much in such a short amount of time. You know, and is it something worth still getting into, or is it just worth now following? Because that's the thing, is there's so much information and you got to follow as much of it as efficiently as possible. So
yeah,
you got anything to add before we call this first one a quit, man?
no, just that I want to ask anyone who watches this for a bit of patience with us. We are new to all these streaming things, and I'm sure it's going to be a bit more easy flowing and yeah, better, improved. Very shortly, we will get used to this.
Yeah, you know, where I'm clicking around and whatnot, and also just keeping the flow of everything going. I'm sure it'll come easier in knowing when we come into the stream where we want to start, where we want to go with it. You know, that'll all just kind of probably evolve over time. And I hope the stream continues to get better. I hope people find this interesting. You know, if you don't find it interesting, you can let us know too, because maybe we can try and change some things around. We're trying to set up stuff as we go. We don't want this to kind of just be the same thing every time. And there's going to be times where, you know, we find a company that we like and maybe we start to focus more heavily on specific companies. We'll start to probably in some streams, I'm sure, go into companies that we own, why we own them currently and still own them, because I think that's important to know. Yeah, I hope some people find this beneficial. I'll try to explain my understanding of the financials as much as possible because, like I said, 3 years ago I had zero background in financial anything really. I mean, I barely understood just some of the basics. I understood, you know, how not to go bankrupt. That's about it. So as I've spent the past few years really evolving my understanding of all this, it's taken time, but I find anything that you put enough time into, you can get good at. You know, you just have to put the time in. So that's one of the things why I keep working on investing, because I really think it's something that someone can get good at if you have the time and you have the right resources. It's really important to have good resources to help explain, which is why I think both Johnny and I, you know, give a lot of credit for RK just to kind of get us initially started here, because I don't think without his initial showing of a way to do this, I would have had the push to really get involved in something quite this in depth. But I do really enjoy it. I think it's a lot of, I find it fun. You find this extremely boring. I don't blame you either. This is definitely extremely boring to some people. You know, if you saw something like this, if this spreadsheet just scares you when you first see it, I don't blame you, because it's an intimidating beast at first to get going, just to even start doing this. But then that's one thing I found. You know, when Johnny reached out and we started talking, we both realized we had the same interest, and the stream's been more of a manifestation of us trying to build something. You know.
Yeah.
All right.
No, I was the same. I started on some version of building sheets many times before I succeeded building the ones I have now, and I gave up. And it was very overwhelming. Like I had no knowledge. Where do I start? And even after watching Roaring Kitty his videos, I struggled a lot. But then I found I gave up, but I kept on at the same time, and all of a sudden I found a way. And it's possible, but you need to go through that process, I think, and you need to. It's very frustrating. It's very, very frustrating. But it's also very rewarding when you go through it and get some kind of end result. It doesn't need to look like this, but something that makes sense for you. I can say for myself, I've learned a lot, and I'm still learning a lot, and I know that I have to improve on both the sheets and also my methods and learning how to invest. So I will never stop trying to learn new ways of doing this.
Yeah, no, for sure. It's definitely just a constant learning process. And you know, just being humble. You know, you're going to be wrong at times, and you know, you learn from your mistakes, like anything. Like that's how you get better at things in life. All right, man. I'll talk to you later. Have a good. All right.